In this video, we're going to talk about how to invest in the stock market for beginners. Before starting, do like the video and subscribe to our channel for future updates. Stock investing is a great strategy to increase wealth. Even during times of market turbulence, stocks are a smart investment for long-term investors because a bear market simply indicates that many companies are discounted. Putting money into an online investment account, which can then be used to purchase shares of stock or stock mutual funds, is one of the best ways for beginners to get started investing in the stock market. You can open a brokerage account and begin investing for the cost of one share in many cases. Number 1, decide how you want to invest in stocks. The process of buying stocks can be approached in various ways. Select the option that most closely reflects your investment goals and level of stock selection involvement from the list. I like to do things on my own, thus I'm interested in picking stocks and stock funds for myself. Continue reading for a breakdown of the information that practical investors need to know, including how to compare stock investments and pick the best account for your needs. Stocks can be a terrific investment, but I'd like someone to handle the process for me, the speaker said. A robo-advisor, a firm that provides inexpensive investment management, might be a good fit for you. These services, which invest your money for you depending on your individual goals, are essentially provided by all of the big brokerage houses. Number 2, select a brokerage account. Generally speaking, you need an investment account in order to invest in stocks. This typically entails opening a brokerage account for the practical kinds. An intelligent choice for people who will need a little assistance is to register an account with a robo-advisor. Both procedures are explained below. A crucial point, you can start an account with very little money with both brokers and robo-advisors. Your best option for buying stocks, ETFs, and a range of other investments is probably an online brokerage account. If you already have sufficient retirement savings elsewhere, you can open a taxable brokerage account with a broker instead of an individual retirement account, often known as an IRA. If you require further information, we have a guide on opening a brokerage account. You should compare brokers based on expenses, trade commissions, account fees, investment options. If you prefer funds, seek for a good variety of commission-free ETFs, investor research, and tools. A robo-advisor provides the advantages of stock investing without requiring its owner to put in the time and effort necessary to choose individual assets. Services from robo-advisors offer full investment management. During the onboarding process, these organizations will inquire about your investment objectives before creating a portfolio for you that is geared toward achieving your goals. Although the management costs may appear high, they are typically much lower than what a human investment manager would charge. The average fee for a robo-advisor is 0.25% of your account balance. Yes, if you want, you can also get an IRA through a robo-advisor. Bonus, if you open an account with a robo-advisor, you generally don't need to read any more. The remainder is only for do-it-yourselfers. Number 3, know the difference between stocks and stock mutual funds. Choosing a DIY approach? Not to worry, it's necessary for it to be difficult to invest in stocks. Most stock market investors must select between these two sorts of investments: exchange-traded funds or stock mutual funds. With mutual funds, you can buy a variety of equities in small quantities all at once. For example, a Standard & Poor's 500 fund duplicates that index by purchasing the stock of the companies in it. Index funds and ETFs are a type of mutual fund that track an index. When you contribute to a fund, you also acquire a minor stake in each of those businesses. To create a diverse portfolio, combine different funds. Keep in mind that equity mutual funds use another name for stock mutual funds. Learn more about the operation of mutual funds, specific stocks, and you can purchase a single share or a small number of shares to test the waters of stock trading if you're interested in a certain firm. It is feasible to create a diversified portfolio out of numerous individual equities, but it requires a sizable investment. Stock mutual funds have the advantage of being naturally diversified, which lowers your risk. The clear choice for the vast majority of investors is a portfolio made up of primarily mutual funds, especially for those who are investing their retirement resources. Mutual funds don't likely grow as quickly as certain individual equities, though. Individual stocks have the advantage that a sensible selection can result in substantial gains, but the likelihood that any particular stock would make you wealthy is incredibly remote. Number 4, set a budget for your stock investment. In this stage of the process, new investors frequently have two inquiries. How much cash do I need to begin stock investing? Depending on how pricey the shares are, you will need a certain amount of cash to purchase a single share of stock. Share prices can run the gamut from a few dollars to several thousand. Exchange-traded funds, ETFs, can be your best option if you want mutual funds but have a limited budget. ETFs trade like stocks, so you buy them from a share price, in some circumstances less than $100, but mutual funds frequently have minimums of $1,000 or more. What amount of money should I put into stocks? Well, have we stated that the majority of financial experts prefer you to invest through funds? If you have a lengthy time zone, you can dedicate a sizable amount of your portfolio to stock funds. An investor in their 30s planning for retirement might put 80% of their portfolio in stock funds and the remaining 20% in both funds. Another situation involves certain stocks. Keep those to a minimum as a general rule of thumb for your investing portfolio. Number 5, focus on the long term. Even though there are many complex tactics and strategies used in the stock market, some of the most successful investors have largely stuck to the fundamentals. Typically, this entails using money for the majority of your portfolio. The best investment most Americans can make, according to Warren Buffett, is a low-cost S&P 500 index fund. Individual equities should only be chosen if you have faith in the long-term growth prospects of the company. After you begin investing in stocks or mutual funds, the smartest course of action may also be the most difficult. Don't look at them. It's a good idea to break the habit of continuously monitoring how your stocks are performing multiple times a day, every day, unless you're trying to defy the odds and win at day trading. Number 6, manage your stock portfolio. There will obviously be moments when you need to check up on your stocks and other investments. Even though worrying over daily changes don't do much for the health of your portfolio on your own. If you use the following techniques to acquire mutual funds and individual stocks over time, you should periodically review your portfolio to make sure it still meets your investment objectives. Several things to think about. You could wish to transfer part of your stock investments to more cautious fixed income investments if you're close to retiring. Consider purchasing stocks or funds in a different sector to increase your portfolio's diversification if it is overly concentrated on one industry or area. Finally, consider geographic diversification as well. Vanguard advises having up to 40% of your portfolio stocks be international stocks. To have this exposure, you can buy global stock mutual funds. Is stock trading for beginners? Although many beginning investors love stocks, the trading portion of this statement is probably not true. We strongly advise employing stock mutual funds in a buy and hold strategy, which we may have already stressed. That is the exact opposite of stock trading, which requires commitment and extensive research. To find opportunities to buy cheap and sell high, stock traders try to time the market. What are the risks of investing? Investing is a commitment of resources now toward a future financial goal. There are many levels of risk, which certain asset classes and investment products inherently much riskier than others, of course. However, essentially all investing comes with at least some degree of risk. It is always possible that the value of your investment will not increase over time. For this reason, a key consideration for investors is how to manage their risk in order to achieve their financial goals, whether they are short or long term. Here's the bottom line. It's possible to invest if you are just starting out with a small amount of money. It's more complicated than just selecting the right investment, a feat that is difficult enough in itself, and you have to be aware of the restrictions that you face as a new investor. You'll have to do your homework to find the minimum deposit requirements and then compare the commissions to those of other brokers. Chances are that you won't be able to cost-effectively buy individual stocks and still diversify with a small amount of money. You will need to choose the broker with which you would like to open an account. Well, what do you think of our video? Do let us know in the comment box below, and please like it and subscribe to the channel for future updates.